Hey everybody, Jonathan Rose here, owner, Masters in Trading. Today, we're going to talk about a very, very special trade setup. In front of you, gold-silver ratio. Let me start by saying, been trading for 20 years. Every trading decision that I make uses a relative value analysis. It's always one thing relative to another. The thinking is nothing's ever cheap in isolation. Nothing's ever expensive in isolation. Something can only be cheap relative to something else. Something can only be expensive relative to something else. In front of you, gold relative to silver. The gold relative to silver, this ratio, it's simply the amount of silver it takes to purchase 1 ounce of gold. So when the ratio is 50, like right here, that means you could use 50 ounces of silver to buy 1 ounce of gold. Here you need 100 ounces of silver to buy 1 ounce of gold. We use this indicator or this ratio to determine the right time to buy gold or to buy silver, the right time to sell gold or to sell silver, or to sell silver. You can see going back to 1968 when the ratio was about 18. It's had a range between 18 to a high of 100. It didn't stay there very long. But the mean, right about 55, 60. Even going back to 98, just looking here, the average, the mean, 60, 65. What makes today so special? In front of you, I'm using Thinkorswim Gold Futures. Here, I just built a very, very straightforward indicator, gold relative to silver. It's gold divided by silver, and then these lines are just 2 standard deviations of movement. Right now, the ratio is trading at 92. This is the second highest it's ever been in its existence. So what that's telling us is right now, silver is very, very, very obnoxiously inexpensive relative to gold. Gold's expensive to silver. So if you're out there and you're like me perhaps, and you think gold's going higher, if you think gold's breaking out, if you think that there is a major distrust in government and the reason Bitcoin's rallying is the same reason gold's rallying, if you believe this is going to continue and you think gold's going higher, I encourage you, don't get long gold. Get long silver, because you're getting long at the highest the ratio's pretty much ever been at. So if gold continues to go higher and this ratio trades lower like we probably expect it to do, you're going to get a much better return being long silver. Same thing if you're bearish gold, which I am not. If you are bearish gold, sell gold. Don't sell silver. Always use relative value analysis. It'll always make sure that you're in quote unquote the right contract. And the right contract is, if you're bullish gold, get long silver. You can get long silver futures, you can get long silver ETFs, silver miners, silver companies, anything that's correlated with silver. That's what we want to be long. And right now, today, June 24th, 2019, I am uber bullish silver. We'll revisit this video in a couple of months. Thanks. Any questions, leave it below in the comments. I'll make sure to answer each one. Thanks, guys. My name is Jonathan Rose, and I'm the owner of Masters in Trading.